Hey traders from around the world, it's Jeremy Alexander Newsom with Real Life Trading. Hope you're doing absolutely sensational. It's Wednesday, a little early in the day, 10:30 my time, 11:30 Eastern. So some of you guys about to hop into lunch maybe. So the market's going to be still open while you watch this. Keep in mind everything that I'm talking about is subject to change due to volatility because there is some FOMC info coming out around 2 Eastern today, 1 Central. It'll be interesting to see what happens. I don't really think anything monumental is going to shift from that, but I don't know. You never know. SPY, I have no short-term position right now in the SPY. Last few days, here's really kind of my analysis. Small evening star versatile types, we probably trade to the 20. And the 20 is really not that far away, honestly. So really the SPY, I'm just hanging out, letting it do its thing. Probably at some point slowly makes its way higher, and then maybe at some point in May starts selling off. Considering this bear call spread, the 215, 216 on the SPY, but still not getting the signal that I want to go into that trade. Maybe later in the day, depending on what the FOMC meeting comes out. If there's any premium, we'll consider that one. Q's down nicely again today. Gap down, a little bit of a doji right now, hanging out. Here's your long-term moving averages, your 100, 200 simple moving average. So we are smack dab in the middle of the 100, 200 simple on the Qs. So at this particular point in time, the spread getting pretty close. Here's the 106, which is right about there. So again, I need that one to expire worthless. So we got plenty of time left on it. So I'm not going to freak out yet. But at this particular point in time, nice little doji right in the middle of long-term moving averages. I do slightly think that we're going to bounce here a little bit on the Qs. We obviously do not have to by any means. This could theoretically be a small island reversal up here on the Qs, and we could roll over nicely. But it really just is going to depend on the overall consensus of the market this afternoon. I mean, a lot of the tech stocks are coming out with earnings, and they've been gapping down or getting traded down. I mean, Netflix is down, Google is down, Apple is down, Twitter is down, and Facebook and Amazon are coming out this week. So, if they gap up hard, maybe the market can rally with their good earnings, but we'll see. Speaking of Apple, here's ticker symbol AAPL, and ladies and gentlemen, what a beautiful bounce Apple had today. So this was the analysis that I posted in TradingView. This is the exact same thing I talked about on Monday and last week. On Apple, if it traded down into earnings and gapped down to the support, was looking to go long. So it did not go bearish today on Apple. Jason Chase, myself, a few others went long actually at the open on Apple because it just gapped down to a really good support, a really good buying location. This is the exact location I mentioned just 2 days ago, and a lot of other traders went long here with either some put sales, buying some shares, doing a bull put spread, buying some calls. But either way on Apple, I think that gap at some point does get filled, maybe a little bit, potentially not all the way. But this is a very good buy low, sell high location on Apple for both a short-term and long-term swing potential, at least in my personal opinion. So here's your weekly chart. You have the 100 simple moving average up here, you got the 200 simple moving average down here, and just down in this general area is definitely a good place, in my opinion, to be a little bit more bullish to neutral. So for those of you who are option fans, could consider some bull put spreads or put sales down here in Apple. I agree, this gap is bearish as far as just the actual gap itself. So probably something like this, a little bit of this, and something like that is probably my consensus for what Apple likely does over the next few weeks. Just my overall thought process. Here's Netflix. Netflix is continuing lower, as we mentioned it likely would. So you had a gorgeous gap on Netflix. Black candle, gapped down, bearish retest gap. Here's your retest. Here's your continuation lower. And I've been waiting for this pullback. For this continuation lower to get into a put sale, an $80 put sale expiring in May. So that filled today for 59 cents. Niels Dean, a few others are in that particular put sale with me, so just something to keep in mind. Netflix, really good buy low, sell high opportunity, I think, is coming up on this one. Here's your weekly chart. So in this general area, looking for a bounce, or if you want to be a long-term investor on Netflix, somewhere in this $88-ish region, 88, 84, 83, 82, somewhere around there. Probably a good buy, long-term location, because it offers good risk reward. Really, stop would be probably down here, and there's your risk, and here's your potential reward. So again, good risk reward on Netflix. Buy low, sell high, ladies and gentlemen. Chipotle. Ladies and gentlemen, Chipotle. So I was keeping a close eye on Chipotle. here's your weekly chart. And again, your weekly charts, I have not played Chipotle yet today at all. Here's your long-term weekly level. So really, really good support. I actually, ironically enough, think that Chipotle is going to trade back down to this previous low around 410 or so. It doesn't have to happen today, but it could. I think we trade down to there and actually bounce. I know it's really, really strange for me to say that, but based on that trend line, that's what I'm going with. It is a good gap, no denying that. Very, very strong gap. So I mentioned strong support. You can see that Chipotle opened below that support and is continuing down. So this is a bearish gap on Chipotle, no question about it. So if you're trading it bearish, probably look for a target into the 407 area, where I think that there's a very small chance that it can bounce, but small enough that I'm not going to go bearish yet on a swing level unless Chipotle can really, really take out that strong support. In fact, kind of looking to buy down in this area on Chipotle. But this gap could be the beginning of the end on Chipotle. I mean, there's a few more 100 points this one could slide easily if we take out some of these support levels. So all I'm saying is it's a buy low, sell high. It's the exact same place it's bounced before, around this $400 mark. I'll keep an eye on it down there, but if I don't get any good confirmation, we'll see what it does. But really nice little bearish gap on Chipotle. Speaking of food, I'm pretty hungry. Here's Buffalo Wild Wings. Got to give a shout out to my boy Troy Beinhauer. Got 3R on the gap down on Buffalo Wild Wings. Sean Bennett, fantastic risk mitigation on Buffalo Wild Wings. So I really, really wanted it to open right about here. That would have been a fantastic open. Opened down about 15%. White candle, gapped down. So it was a bearish gap and go. If you got a chance to play it, here's your 5-minute charts. Might have taken a few stabs at it. But either way, if you played it bearish, unless you're Troy, you might have lost a little bit on that one. So I did lose about 0.4R or so on Buffalo Wild Wings on a bearish trade early this morning. So what do I think happens on this one now? Well, here's your weekly charts. And again, weekly chart, you have a lot of reversal patterns, but you did trade down to a relatively decent support on Buffalo Wild Wings. So it'll depend a little bit on what happens towards the end of the day. But if we end with a bullish candle on the daily chart on Buffalo Wild Wings, I think we trade up a little bit higher and fill some of this gap a little bit more on Buffalo Wild Wings. Let's go check out Twitter. Another one that, if you got a chance to play it bearish, fantastic. Definitely lost very, very small. It did open in my, hey, I'm pretty bearish kind of zone on Twitter. So I'm pretty much always bearish on Twitter, especially over earnings. And I say earnings in quotes because they don't really have any earnings. Really good gap on Twitter. Let me rephrase. Fantastic bearish gap on Twitter. Did lose a little bit on Twitter as well this morning. So remember, if you're trading, especially if you're day trading, got to go in with every trade with a plan to lose as little as possible. So Twitter actually got out for break even. Played this one on the 1-minute chart because it was just such a nice trade. Just really, really beautiful. Looking gorgeous. A little bit of a breakdown right there. Stop was right there. And, retest looked really, really good. Came back up into here, and this is where I exited for break even because it just was not acting the way I wanted it to with such a flawless gap. So Twitter, we'll see a little bit later, I guess, what ends up happening on it. Amazing, amazing bearish gap. I am going to be keeping my eyes on that one for a bearish continuation. It doesn't have to, obviously, but we'll see exactly how that plays out. So lost a little bit on Twitter, lost a little bit on Buffalo Wild Wings, and then honestly, thanks to my boy Brad Reed, Goodyear Tire. Here's the 5-minute chart, and amazing bearish gap and go on Goodyear. Here's your 5-minute chart on Goodyear. Stock, as soon as it gapped down, traded up, and then just rolled over. Gorgeous little white candle right there. Boom. Rolling over here. So right now my stop on Goodyear. What is my stop on Goodyear? Let me check. 3016 on Goodyear. So I have a dentist appointment about an hour and a half. So if this doesn't hit that target, that 2R target here very, very soon, I'll probably end up exiting. But pretty much regardless of what happens on Goodyear, I stand to make a very, very small gain on some day trades today. So overall, looks to be good. And of course, interested to see what happens on Goodyear. But again, nice little bearish gap down. We're going to put that on the list for Transportation Thursday, which is going to be tomorrow in the afternoon from 5 to 6 Eastern Standard Time. Let's check out just a few more, shall we? Facebook having earnings coming up soon. And I really don't know what Facebook's going to do, honestly. I don't really have an amazing location for Facebook to gap down to. This red zone is going to be a bearish if it gaps down to there. It really could be a little bit bearish if it gaps down to this level as well, which is about 104.50 to about 102.10. I don't know if Facebook gaps up, but if it does gap up at the all-time high, that's going to be a pretty big gap. If it can open around 99, I'll be a little bit bearish, but I don't really have anything spectacular on Facebook. I think earnings are going to be a little bit weird today. So we'll see how it plays out, but I'm not really super excited about anything particular on Facebook. Fitbit, we're still in a bullish trade on Fitbit. We're going to be exiting before earnings. We've increased our stop a little bit. 100 simple moving average is now 1878, so we keep slowly inching this target down, looking to exit at the 100 simple moving average on Fitbit. And if there's two other swing trades you guys want to keep your eyes on, VRX is definitely one of them. I really like this gap. I like these small candles. I know earnings is coming up next week as well, so this will not be a long-term swing trade unless you want to hold over earnings. It'll probably be a really, really quick move. Anyway, keep your eyes on VRX as a potential bullish pop. And the Container Store, ticker symbol TCS, did get triggered in bullish today on the Container Store. Light volume, so doing this one with shares, not a very expensive stock, but this is a bullish gap and go on all accounts. Looks good. We'll see what happens on it, ladies and gentlemen. Awesome. Thanks so much for watching this Wednesday Real Life Stock Review. Again, if you have any other questions about any other stocks, let me know. I do take requests and happy to look at whatever stocks you guys are interested in your next Friday Real Life Stock Review. Until then, remember, love life, live life, and trade. See ya.